Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson. I've asked Paul Locke, he's the Managing Director of Pan Asia Metals, to come and join us. Give us an update. The last time I spoke to Paul was end of June last year. There's been a lot of news out there. For those of you that don't know, they're a battery and critical metals explorer up in Thailand. Interesting in the lithium sector, but it's lepidolite. And we'll get into that as well. Paul, great to see you again. Can I still say Happy New Year? It's February, probably not.
No, we're banned from saying that now. Hi, Kerry, how are you?
I'm very well. Paul, for those that might not know, I think they do, but let's just give a brief overview of who are Pan Asia Metals.
Okay, so Pan Asia Metals is a Singapore-based, Southeast Asian-focused exploration and development company focusing on battery and critical metals. And our key project, the Reung Kiet lithium project, is located in southern Thailand. We also have, that has 2 prospects, and we also have several projects, or one project under application at this point called the Katatong geothermal lithium and hard rock lithium and tin project.
So a few projects there, but before we get into the actual projects themselves, I just want to say congratulations. I think you're just finished a cap raise at where you've raised 4.5 mil at a premium. When most people are doing things at a discount, you're at a premium. You've got 2 Thai and 1 Australian institutional investor. How important was it to get that support from the Thais?
Well, the 2 Thai institutional investors are focused on opportunities in Southeast Asia. Southeast Asia has 600 million people, very young population, high growth rates, and they see a lot of opportunity there. They particularly see a lot of opportunity in the EV sector, and hence their interest in what Pan Asia Metals is doing. Having them on board is a huge boost for PAM. It demonstrates that the locals understand the company. I think Pan Asia Metals is incredibly undervalued for what we've got and where we are. So it shows that they understand the company. It also sends a signal to other investors in the region that this is a company worth looking at. And the fact that they came in at a premium shows that they're not interested in bickering around a discount and all of that sort of jazz. They just want to put their stake in the ground. Their holdings will be reasonably sizable. So we issued 11.25 million shares. It's just under, it's about 8% of the register outstanding, a bit less. And it puts them near the top of the register. And my understanding is they plan to build too. So from what I've seen elsewhere, they will slowly build their holdings in the company. So I think it's a big boost for the company.
You said something fairly strong, a strong statement just before, that you feel like you're very undervalued. Can you put some color, a little bit of color around that? I mean, is it because of where you are? Is it tight capital structure? What's the rationale behind that?
Pan Asia Metals has a mineral resource. It's 10.4 million tonnes at 0.44% Li2O. We've been drilling out that mineral resource to take it from inferred through to indicated and measured, and we'll get an increase in tonnes. The grade will stay about the same. And we're located in Southeast Asia. We're right in the middle of our market where all our inputs are and our outputs are. And we're actually, I think, one of 12 companies on the ASX with a lithium mineral resource. And where we are, we're situated in our market where none of our peers really are. Some Europeans are. So when I look at the peer group and some of the valuations, we are actually quite low. So I see a lot of upside in the company, and I'm hoping the market will start to recognise that this year.
All right. Well, speaking of the market recognising it, you had an initial mineral resource. When's the update coming?
So the initial mineral resource was based on holes 0 to 46. We're on hole 101. The update is based on holes 47 to 94 or 95. We're waiting for those final assays. They're imminent. And then CSA Global, who did the initial resource estimate, will start their work, given that they've got a model and so on, it should be a quicker job. We're expecting the mineral resource to be ready late Feb or very early March.
And that will show you what? I mean, where do you go once that's with you?
Well, to show how fantastic our company is. But what that means is we can then progress to our pre-feasibility study. So really, we've been waiting for the updated mineral resource. Then we can start doing some work on, the pit shell and the layout and so on. And then that'll lead straight into the PFS.
Is that what the funds raised will be doing? Will be going to that sort of work? Just give us an outline of where this 4.5. Well, it actually gives you 6 million in the bank. It'd be nice to actually, as we're talking at the start of February 2023, you've mentioned some of the things that you're doing, but the funds themselves, will they be going to the other projects?
Well, yes. We're about to move the rigs across to Bangi Tum, which is the second prospect at Reung Kiet. So the funds will be used for the work we're doing at Reung Kiet prospect, the drilling and associated work we'll do at the Bangi Tum prospect. It'll be used to explore some other initiatives in Southeast Asia. So we mentioned in our quarterly that in our strategy update that we're looking at the opportunity for a standalone converter plant in the region. So we're starting some studies on that. It'll also be used to consider some new project opportunities. So we're actually looking at projects all the time, and I'm hoping, I say this quite regularly, so we have quite high hurdle rates, but we're hoping to bring something into the portfolio pretty soon.
When you say a standalone converter plant, does that mean that you're not, right now, I guess the market would look at you and say that you're a critical minerals explorer. I would say you're more getting closer to development, but with a standalone converter plant, how does that fit into the strategy? What's that where does that fit?
Well, we see Southeast Asia as really a booming EV market. So when I look at Asia as a whole, you might remember in the 60s and 70s, the term was coined, the Asian tigers and the cubs. The tigers were Hong Kong, Taiwan, Singapore, and one other, I think. And the cubs were Southeast Asia, Malaysia, Thailand, Philippines, and maybe Indonesia. Well, we see the same dynamic now, but the tigers have changed in the EV sector. Clearly, China is leading the pack and probably will do for a long time. And you've got Korea and Japan. But all of those countries or their companies in them are looking at Southeast Asia, like they have done previously, to build out their EV and battery production. So you've got companies looking at Indonesia, Malaysia, Thailand, and Vietnam, and there's a lot of activity in all of these countries. So we see an opportunity for, we see potential for a conversion plant there, and we'd only do such a thing if we had the right partners. But it doesn't cost much to explore these things, and you never know what comes out of it.
So where you are at the moment, that converter plant's not necessarily going to be in Thailand. It could be anywhere in Southeast Asia. Is that what you're saying?
That's what we're exploring, yes.
Okay, so early days there. I can see from the map behind you that there's where your projects are. Probably other people can't, but that's all right. But you're right in the heart of your customers, aren't you? Do you think that gives Pan Asia Metals, I guess, a lot stronger position, because you are, like, from a supply chain issue, if there are challenges in the future, your product is there and you can ship it directly to them. Does that give you a big advantage, do you think?
Absolutely a massive advantage. So a lot of projects which are remote can't really go past the mine gate. I mean, you could do anything in theory, but when you've got to start importing your inputs to process product so that you can export a value-added product, if you're remote, the costs go up. So where we are in Thailand, our projects are literally right in the middle of the Thai and Malaysian industrial sectors. And both countries have quite large oil and gas sectors. So a lot of acid and so on comes out of those. They have very large chemical sectors. And then they have a lot of advanced manufacturing sectors. So, they're producing all sorts of electronics and cars. For instance, Thailand's the largest auto producer in Southeast Asia, the fourth largest in Asia.
Wow.
And it'll probably retain that position. So when you've got that dynamic around you, all of your inputs are right on your doorstep. And it's not one customer. It's not one supplier. You've got several suppliers. So you've got a lot of, in your supply chain, a lot of security in the fact that there's you're not tied in with one supplier. And then our markets are quite large too, really.
A lot of people would turn around and say, by the way, fun fact, ladies and gentlemen, I was actually born in Bangkok, Thailand, so I love Thailand. But some people will turn around and say potentially challenging. I won't name names, but there was a company there before in the past that had some challenges. How is it doing business with the Thais?
Well, the company you're thinking about is Kingsgate. They did have challenges, so we're not trying to hide from that. Kingsgate is a precious metals miner. We look at gold as an emotional metal. Whenever you're exploring for or mining gold, your community thinks you're just taking it out of the ground. That's a perception which happens in a lot of countries. When you're exploring for an industrial metal, which you can't really see, it's a completely different dynamic. Further, our projects are looking to value add in Thailand. So we get a lot of support from the Thai government because we're actually looking to contribute to their industrial sector. We're not looking to export a basic product. So they're viewed entirely differently. Okay. But I would argue that when we look at projects globally, political risk comes in all sorts of forms, and every country has political risk, and you just need to understand what that is and how to manage it. And given that we've been in Southeast Asia for a very long time, we have a good feel for political risk and how to manage it. So we don't see that as an issue at all. Another point too, and this comes back to value adding. A lot of companies talk about tier one jurisdiction. I don't really buy that myself, but I'll give it to them. They may be in a tier one mining jurisdiction, but we're in an absolute tier one manufacturing and processing jurisdiction. So all through Asia, everyone is processing and manufacturing there because it's a low cost environment. All the inputs are there. You've got huge ecosystems, and we've got a huge electric vehicle and battery ecosystem forming, and we're right in the middle of it.
Actually, that's a really good point, because I mentioned right at the start, you've just done a capital raise. You've got $6 million in the bank. Because of what you just said, I'm assuming that goes a lot further than if you were operating in Australia.
That's right. So in the exploration phase, we find that our dollar goes 2 to 3 times further. We actually pay our people well above the standard, and we still get a lot of bang for our buck. So we've got a really happy workforce. We do really good exploration, and we get good value.
Talking of exploration, Reung Kiet, which is your flagship project, I can never pronounce the names exactly. He's so much better at it, ladies and gentlemen. With that one, and then, of course, Bangi Tung, which is number 2, but you've got a geothermal project happening. Is it Katatong?
Katatong's geothermal, but we look at the geothermal market, and there's a few candidates out there conducting work. We want to see them deliver before we start spending too much money on it. So, it's an expensive, way to explore for geothermal and develop it. There's a lot of water to pass under that bridge. And so we're watching some of our peers really closely on what they're doing. They seem to be kicking some great goals, which is fantastic for the sector. So what we want to do is just let that happen. And we need to get those projects licensed anyway. And we've got our hands full with Reung Kiet I'm sure that's how you pronounce it. We've got 4 geologists there. They're fully employed, and it would take we would have to employ new staff to actually do further exploration there. So we're really happy with Reung Kiet and where we're going, keeping in mind that, at Reung Kiet, we've got 10.4 million tonnes of a mineral resource, which we want to expand. So there'll be a tonne upgrade there. And at Bangi Tum, we've got a drill-supported exploration target of 8 to 14 million tonnes. So it's important that people understand it's drill-supported. And also, we announced late last year the results of our field work, where we basically increased the target zone by 200%. And of our 64 rock chips there, and channels which are non-selective, it's pretty hard to select 64, which were non-selective, but they average 1.56% Li2O. 35 of the samples were greater than 1, 12 greater than 2%, and the highest 2.62% Li2O. So I'm not seeing many companies produce field exploration results like that. So we're really excited about this project. And if all goes well, I can see us producing some pretty good tonnes there at good grades.
We're talking lithium, but there's lithium and there's lithium, and some people, yours is lepidolite, and I know I got that pronunciation right. There are some that don't understand lepidolite, so I think it's really important, if you would, why this is quite I guess, what is the difference between, I guess, the spodumene, the brines, and lepidolite?
Well, I think when most people look at exploration projects, the first figures they look at are grades and tonnes. Yep. If there are no grades and tonnes available, it's how many square kilometres you have. We don't look at projects that way. In fact, when we look at applications, we even use the term bikini application sometimes, because if you look at any mine in the world, very few mines are more than one square kilometre. So when you've got 1,000 or 2,000 square kilometres of exploration ground, you need to manage that, and it's quite difficult. It's not necessarily, grade and tonnes don't necessarily make a great project, and there are plenty of case studies out there where projects with the best grade and tonnes actually don't perform the best economically for various reasons. It could be metallurgy, mostly it's geography, they're just remote. With regard to lepidolite, so when lithium first got going, lithium was being produced from brine and spodumene, and so they were the go-to minerals because they were understood. If one person could do it with that, other people can. And lepidolite has been used for lithium before, but the only operating mine was Greenbushes in 2015, really. So spodumene was the go-to mineral. But and there are several lepidolite projects out there, but none are producing outside of China. But when you look at China, I think 18% of China's 2021 lithium production came from lepidolite, and that's growing. And on the cost curve, and there's a cost curve produced by Wood Mackenzie, which was in the Tianqi prospectus when Tianqi floated in mid-2022. And in the hard rock cost curve, lepidolite was, all the lepidolite projects were sitting in the bottom third. Now that's, but the grades range from 0.3 to 0.6% Li2O, where with spodumene, it's typically from the very high 0.9s through to, 1.4, sometimes higher. But the advantage there is proximity. So the Chinese projects, they mine it and process it next door. Right. And that's where your cost savings are. So we think we can achieve essentially the same outcome in Thailand.
But are there other cost savings with lepidolite? It uses less energy, from what I understand?
It depends which processing route you use and so on, and that's subject to our feasibility work. And the process routes are different. From our understanding, lepidolite is cheaper to process than spodumene, but we've got to produce those results.
Paul, are you having conversations, or is it far too early with some of those customers that are literally in close proximity, almost on your doorstep?
We're always having conversations, and I get asked by our shareholders quite regularly, when will we have an MOU? I'm hoping we'll have something soon, but we want the right MOU. I'm not looking to wave the flag. So one thing I say to shareholders quite often is, we're not flag wavers. We look at projects which are doable, that at the outset, we do analysis and go, yeah, this is realistic. When you sign an MOU, even though it's non-binding, you're effectively making a commitment to a party. And if you're making a commitment just to wave the flag for a bit of a share price rally, that's a bit sad. But we're looking at evaluating what we produce. So our objective with our pre-feasibility study is to study the economics of producing lithium carbonate and or lithium hydroxide, most likely carbonate. And then what we want to do with the right knowledge partner is take that lithium chemical and produce a cathode active material. So we are we're having discussions. I mean, every company's always having discussions with potential knowledge partners with the skills in those areas.
One of the things you said recently was that with your strategy in Southeast Asia, you see it paying off in 2023. We're in 2023. Where's the payoff? Because again, beautiful audience out there. I'm sure shareholders are watching, but there will be others that may not be shareholders at the moment. But what's that payoff strategy in 2023? When
did I say that?
It's in a little thing that I've got here that you said. You said it's expected to start paying off in 2023.
So the reason I said that, it was in our quarterly. The reason I said, I just wanted to know if you'd read
it. He's a cheeky man, ladies. I'll tell you what, he'll catch you if you're not careful.
The reason I said that is we've been pursuing initiatives all through 2022. And I was hoping we'd have some stuff ready during there, but I'm pretty sure it'll happen during 2023. So, in 23, we're very close to a mineral resource upgrade.
Yep.
We've started our feasibility work. We've got, we're looking at several opportunities, etc. We've been in discussions with several potential knowledge partners. I expect all four of those items to come off during this year. So that's why I think 2023 will be a good year, because I know I'll have to announce something and I couldn't announce it during 2022.
Oh, okay. You're also very conscious, which I think is important for people to understand, of your capital structure and any sort of dilution. And so you still keeping a very tight capital structure. That going to be important going forward?
It's always important. I think once you let your capital structure slide, it's sort of you're in a death spiral. And you look at some capital structures out there, when you've got 5 or 6 billion shares, that sort of stuff, very hard to manage. And once you start issuing warrants and options, that can be incredibly dilutionary. It can work to your advantage, but there's always dilution. So we're very conscious of our capital structure. And I know in our top 20 shareholders who I speak to quite regularly that they're very conscious of it and appreciate that we've actually managed to keep it nice and tight. Doesn't mean we won't issue shares. I mean, we've got to grow, and we issued shares this week at a price I wasn't very happy with, to be honest. I think we're undervalued, but it was great to get a premium. But you've got to be pragmatic, and depending on the situation or the opportunity, we're happy to use our shares as to do whatever we've got to do.
How fast, I'm not sure whether you can answer this, how fast do you think you can get into production on Reung Kiet?
Oh, I think realistically, you'd be looking at late 24, early 25.
Okay.
Yeah, I don't think we've got to submit for MLA, and even though we'll produce a PFS, and then we've got to go through to a DFS, and because we'd be producing lithium carbonate or hydroxide, there's a chemical plant attached to the back end of mining. So, look, I think if I was to try and say it'll be earlier than that, I'd be telling tall stories. Although I'd like it to be earlier.
We don't want you to tell tall stories, Paul, and we are starting to run out of time. So if I can just ask you, as I've done before, and when we last spoke, you said that your MRE that have been announced, you're further ahead than your peers. Do you still see yourself further ahead than your peers? And the fact that lepidolite had cost advantages, and third point you made was supply chain issues. Has any of that changed if we wrap this up, or are there things that people should look at? In other words, what are the three reasons people should sit up and take notice?
Well, I think whenever you're looking at a project or a company, geography is important, particularly if you want to go past the mine gate. So that's a huge standout point that we have, and we want to move past the mine gate. That's what we're working on. And if we can do that, then we start to be re-rated a bit differently. So that's number one. Number two is cost environment. We're in a very low cost environment, but we have a lot of skilled labour around us. So when we look at skilled labour, we've got a lot of petroleum and chemical plants in Southeast Asia being built and that have been built, and they all require skilled labour. So that's the labour we'll be using to build our projects. Another important point, and we're seeing this, we saw this with the Kemerton and Kwinana plants, the cost blowouts, and Liontown recently announced that they'd had I think it was about a 60% cost blowout over their 21 DFS figures. And this is just a factor of the inflationary environment we're in, but possibly also, I think, the tight labour market in Australia has something to do with it. In Asia, we don't see the same inflation, and also our labour market doesn't really have borders, particularly during construction. So when we're building a plant, we can really tap into labour in Asia, not just in Thailand. So that'll ensure that things can be done relatively quickly and to budget.
More importantly, to budget. My final question to you, Paul, is this. Do you see yourself as an explorer or a chemical manufacturer further down the plant, a bit further down the timeline?
Well, I see myself as a trader, Kerry.
Yeah.
I like, I like chemicals. I like that a part of it, but I'm always looking at exploration projects. So I think we'll be both.
All right. Well, Paul Locke, come back and have a chat with us again soon. It's been really good to hear an update from Pan Asia Metals. Ladies and gentlemen, go and check out the website as well, Pan Asia Metals. I think it's .com.au, isn't it?
No, just .com.
Yeah, you see, I'm just testing. Good to see you, Paul. Thanks so much for joining me today on Small Caps.
Thanks, Kerry.